Yes, today we are going to see campaign. First, we are going to see the meaning of a campaign, types of sales, debentures, including dividend and proposed annual dividend, statement of changes in equity. So, what is a campaign? So, we are going to see first what is a campaign. A campaign is an association of shareholders formed with a view to make profit. A company raises capital by the issue of shares via the stock market. So this is a company. A company is an association of shareholders formed with a view to make profit. A company raises capital by the issue of shares via the stock market. So we are referring to public companies which can raise capital by the issue of shares. Issue of shares means sales of shares to the public. So this is a company. So what is a shareholder? What is a shareholder? A shareholder is someone who has purchased shares in a company business. A share is a unit. A share is a unit of capital. Is a unit of share capital. So, a shareholder is someone who has purchased shares in a company business. A share is a unit of share capital. So, if a person wants to buy shares, he can approach a stock market and he can buy shares on the stock exchange via a broker. Now, so this is a company business. It is an association of shareholders formed with a view to make profit. Now we are going to see types of shareholders. Types of shares. So we have two main types of shares. Number one, ordinary shares. And number two, we have preference shares. So ordinary shares and preference shares. Now let us see first ordinary shares. Ordinary shares are also known as equity shares. Okay. A person who buys ordinary shares becomes an ordinary shareholder. So ordinary shares are also known as equity shares. A person buys shares in a company in order to benefit from dividend. So ordinary shareholders will get dividend depending on the level of profit. If the level of profit is high, a high dividend will be paid to ordinary shareholders. If the level of profit is low, a low dividend will be paid to ordinary shareholders. If there is no profit, no dividend will be paid to ordinary shareholders. Ordinary shareholders are owners of the company. They have voting rights in the company. and they play an active role in the day-to-day running of the business. But they suffer from unlimited liability. This means that in case of bankruptcy or liquidation, they run the risk of losing the initial capital invested as well as their private means and assets in order to pay the debts of the company. So dividend depends on the level of the company's profit. If profit is high, a high dividend will be paid. A high dividend will be paid. And if profit is low, a low dividend will be paid. A low dividend will be paid. If no profit is left, no dividend will be paid. No dividend will be paid. So, dividend for ordinary shareholders depends on the level of profit. If the company is making higher profit, a higher dividend will be paid. If profit is low, a low dividend will be paid. In case there is no profit left, so no dividend will be paid. So this is ordinary shares are also known as equity shares. Dividend depends on the level of the company's profit. If profit is high, a high dividend will be paid. And if profit is low, a low dividend will be paid. If no profit is left, no dividend will be paid. And ordinary shareholders are owners of the company. They have voting rights in the company. So, ordinary shareholders play an active role in the management of the company business. Ordinary shareholders or owners of the company, and they have voting rights in case of general annual election. So, ordinary shareholders play an active role in the management of the company business. Ordinary shareholders are owners of the company and they have voting rights. Now, ordinary shareholders have unlimited liability. This means in case of bankruptcy or liquidation, they will lose their initial capital invested. They will lose their initial capital invested, as well as as well as their private means and assets in order to pay the debts of the company. In order to pay the debts of the company. Ordinary shareholders have unlimited liability. This means in case of bankruptcy or liquidation, they will lose their initial capital invested as well as their private means and assets in order to pay the debts of the company. Since they are owners of the company, they will get dividend loss. So ordinary shareholders are rank loss in terms of dividend payments. So they are the last one to receive dividend. Ordinary shareholders are rank loss in terms of dividend payments. So we are going to make a recapitulation of what we studied so far concerning ordinary shares. Ordinary shares, also known as equity shares. Dividend depends on the level of the company's profit. If profit is high, a high dividend will be paid. If profit is low, a low dividend will be paid. In case profit is nil, no dividend will be paid. Ordinary shareholders have voting rights in the company. Ordinary shareholders are owners of the company. They play an active role in the day-to-day running of the business. They suffer from unlimited liability. This means that in case of bankruptcy or liquidation, they will lose their initial capital invested as well as their private means and assets in order to pay the debts of the business. They are the last person to receive dividend in the company. That is a rank loss in terms of dividend payments. So here we are concerning ordinary shareholders. Now let's see preference shares. Preference shares. Now preference shares get a fixed rate of dividend irrespective of the level of profit. If profit is low or high or profit is nil, dividend will have to be paid to preference shareholders. They are not owners of the company. They do not play an active role in the business. They are not owners of the company. They do not play an active role in the business. They do not have voting rights. And they have limited liability. This means in case of bankruptcy or liquidation, they will lose only their initial capital invested. They do not run the risk of losing their private means and assets in order to pay the debts of the business. They get dividend before ordinary shareholders. So let's see. Preference shares get a fixed rate of dividend, irrespective of the level of profit. In case profit is nil, dividend has to be paid to preference shareholders. Dividend have to be paid to preference shareholders. So they are not preference shareholders are not owners of the company, and they do not they do not play an active role. They do not play an active role in the day-to-day running, in the day-to-day running of the business. They do not have voting rights. So they have limited liability. They have limited liability. So they have limited liability. This means in case of bankruptcy, they will lose only their initial capital invested. They do not run the risk of losing their private means and assets, in order to pay the debts of the business. And finally, they will receive dividend before ordinary shareholders. They receive dividend before ordinary shareholders. So here we are, so far concerning preference shares. So we are going to make a recapitulation. Preference shareholders get a fixed rate of dividend irrespective of the level of the company's profit. If profit is nil, no dividend will have to be paid to preference shareholders. They are not owners of the company. They do not play an active role in the day-to-day management of the business. They do not have voting rights. They have limited liability. This means that in case of bankruptcy or liquidation, they will lose only their initial capital invested. They do not run the risk of losing their private means and assets. So here we are, so far concerning ordinary shares and preference shares. Now we are going to see debentures. Debentures are long-term loan to the company. Debenture holders get a fixed rate of interest irrespective of the level of profit. Even if profit is nil, debenture interest must be paid. So debentures are long-term loan to the company. Debenture holders get a fixed rate of interest irrespective of the level of profit. Even if profit is nil, debenture interest must be paid. So now what happens if the company fails to pay the debenture holders on the due dates? In case the company fails to pay the debenture holders on the due dates, charges may be placed on the company's assets. It can be a fixed charge or a floating charge. So, in case the company fails to pay the debenture holders on the due dates, charges may be placed on the company's assets. It can be a fixed charge or a floating charge. So debenture interest will reduce the company's profit. So when we pay debenture, we will have to pay interest on debentures when we take loan. So in this case, profit will reduce. Debenture interest will be recorded in the income statement, on the debit side of the income statement. So far we are here, we have seen ordinary sales, we have seen ordinary sales, preference sales, and debentures. In the next lessons, we are going to see the statement of changes in equity and types of share capital, authorized share capital, issued share capital, and so on. Thank you very much for your attention. Yes, today we are going to see authorized share capital. It is a maximum amount of shares which a company is allowed to raise from the public by the issue of shares. The authorized share capital can increase with the consent or approval of the shareholders. Example, authorized share capital, a company can issue 500,000 ordinary shares of $1 each, and it can issue 200,000 of preference shares of $0.5 each. So, authorized share capital, it is a maximum amount of shares which a company can raise from the public by the issue of shares. Maximum amount of shares which a company can raise from the public. So this authorized share capital can increase with the consent of the shareholders. Issued share capital, it is the number of shares actually issued on the market for sales. So part of the authorized capital is issued on the market for sales. Issued share capital can equal to authorized share capital, but it can never exceed the latter. For example, the company is allowed to raise 500,000 ordinary shares from the public, so it can issue only 300,000 ordinary shares as issued capital on the market. Here, 200,000 preference shares, it can issue only 50,000 preference shares on the market. So, the amount of share capital shares issued on the market for sale is known as issued share capital, and this one, the total, is known as authorized share capital. So, we are going to see this again when we are going to prepare the statement of changes in equity and so on. For the time being, this remember, authorized share capital is a maximum amount of shares which a company is allowed to raise from the public by the issue of shares. Issued capital is a number of shares actually issued on the market for sale. Now we are going to see types of reserves. You have revenue reserve and capital reserves. Revenue reserve arises from the trading activities of the business. So profit that we obtain, part of the profit can be kept in the reserve, which is known as revenue reserve. It is a reserve which is created out of the appropriation account balance, or what we call statement of changes in equity. In this case, the appropriation account will be debited and the revenue reserve account will be credited. So profit will reduce, we will take out from profit. Some of the profit will be kept aside, and this reserve is known as revenue reserve. It can be used to pay dividend to shareholders. Normally, revenue reserve is created in order to pay dividend to shareholders when the company falls short of profit. In case there is no profit left, so the company can withdraw from the revenue reserve to pay dividend to shareholders. Example of revenue reserve are general reserve, profit for the year, foreign exchange reserve, retained profit. Now, capital reserve. Capital reserve is not created from the trading activities of the business, that is, it is not obtained, it is not created out of profit. It cannot be used to pay dividend to shareholders. This reserve is created by the issue of shares, revaluation of assets, and so on. Example of capital reserve are share premium account balance, revaluation reserve, and capital redemption reserve. This reserve, capital reserve, can be used to finance bonus shares, to finance bonus shares. This reserve can be used to finance bonus shares. Okay, it cannot be used to pay dividend to shareholders. So here we are so far concerning types of reserves, revenue reserve and capital reserve, which is very important. So here we are. Now we are going to see issue of shares. Issue of shares means issue of shares means the sale of shares. Issue of shares means the sale of shares. Any issue of shares, any issue of shares will increase the share capital, by the par value, So any issue of shares will increase the share capital. Share capital has a credit balance. So if you are issuing more shares, then therefore we have to credit the capital account. Now, shares can be issued. Shares can be issued at par value, at premium value, or at a discount, Here we are. Now, example, issue of shares at par value. Now, XYZ Limited issue 5,000 ordinary shares of $10 each. XYZ Limited issue 5,000 ordinary shares of $10 each. So any issue of shares will increase the share capital. Therefore, we credit ordinary share capital. 5,000 shares times $1. This will be 5,000. Can be raised from the public. And then debit bank. When we are issuing shares, we are getting money. 5,000 times $1. This will give us 5,000. Issue of shares at par. The par value is $1. This is the par value, $1. Now, issue of shares at premium. Shares can be issued at premium. Issue of shares at premium now. So, in excess of the par value, issue of shares at premium. X, Y, Z Limited issue 5,000 ordinary shares of $1 each at a price of $5. So this is a par value, this is a par value, and this is a market value. So the difference between the par value and the market value, the difference is known as premium. The difference between the par value and the market value is known as premium, the excess. Therefore, premium is $4. Premium is a capital reserve. It will have a credit balance. Therefore, any issue of shares will increase the share capital by the par value. So, the double entry, credit ordinary share capital 5,000 times $1. This will give us 5,000. Any increase or decrease in share capital will always be recorded at par value. Credit share premium 5,000 times $4. This will give us 20,000. And debit bank 5,000 times market price 5. This will give us 25,000. So issue of shares at premium. So issue of shares at premium, the double entry will be, here we are, this is capital reserve, the excess. Always the share capital will increase or decrease by the par value. Share premium, the difference between the market value and the par value. And then we have the debit bank, this is 5,000 times $5. This is the market value. Now we are going to see a last one. Issue of shares at a discount, which is rarely used. Issue of shares at a discount. That is below the par value. Issue of shares at a discount. Now, issue of shares at a discount. This is below the par value. X, Y, Z Limited issue 5,000 ordinary shares of $10 each at a price of 25 pence. At a price of 25 pence. Now, this is a market, this is a par value, and this is a market value. The market value is less than the par value. So in this case, the difference will represent discount. So issue of shares credit ordinary share capital 5,000 times $1. This will give us 5,000. Debit bank 5,000 times market value 0.25. This will give us do account. And then we have to debit discount and issue account. Discount on issue account 5,000 shares times 0.75. Issue of shares discount, this will give us 3,750. So debit bank by the market value 0.525 and debit discount on issue by 0.75. So here we also for concerning issue of shares at premium, issue of shares at par, and issue of shares at a discount. Thank you very much. Now we are going to see a statement of changes in equity, or statement of changes in equity. Formerly, it was known as profit and loss appropriation account of a company business. One of the drawbacks of the appropriation account is it does not show total shareholders' fund. It indicates only the retained profit. The statement of changes in equity enable a company to calculate total shareholders' fund. It takes into account both share capital and reserves. Now we will see a format of the statement of changes in equity, and then we will do a work example. So this is a format of a statement of changes in equity. So we have one column for date, and then share capital followed by by capital reserve, share premium and revaluation reserve. Then we have revenue reserve, and then total. Share capital plus reserve is equal to shareholders fund. So the balance will be given in the question. You just have to copy share capital, share premium, revaluation reserve, general reserve, retained profit, and then we get the total. Profit, this profit, the net profit, we have to deduct interest on debentures, in case interest on loan. So we have to put it in this column, retained profit, then the total. New issue is an issue of shares at par at premium. This is at par, no premium. So we put it here, credit share capital, and then in the total, issue of shares at premium in both columns. At par in the first column, at premium in the second column, then the total. Transfer to general reserve in the column of general reserve. Then we have to take out from the withdraw from retained profit to put in general reserve. Revaluation reserve, we have to include in the revaluation reserve column. Then we get the total. Interim dividend paid, we will pay dividend out of retained profit, and then we have to deduct from the total. Previous year's dividend, in some cases previous year's dividend have not yet been paid, so we have to pay, then we record in the, and this one we have to add all these: share capital, share premium, revaluation reserve, general reserve, retained profit, total. This total is known as, this total, share capital plus reserve, this total is known as shareholders fund. So you have to check which one you add here, and then we add the total. This is equal to the total shareholders fund. So this is a format for the statement of changes in equity. Then we will see a work example on this using this format. Thank you very much. And there may be other column as well depending on the question. If there are other reserve, foreign exchange reserve, there are other reserves, then we have to add. So if there is only in the question share premium and revaluation reserve, no need to add general reserve. We have to eliminate this column. Then we have to use only retained profit and total. It depends on the question, but this is a general format of statement of changes in equity. Yes, today we are going to see a question on statement of changes in equity, that is company accounting. This is question for November 2014, paper 42, number 1. So the question: the directors of Aston plc provided the following financial information at 1st June 2013. Ordinary share capital $1 shares 25,000, 25 million, 3 zeros upstairs. Share premium 5 million, revaluation reserve 1 million, retained earnings 2,950,000, land 6 million. On 1st July 2013, 1,800,000 8% debentures were issued. For the year ended 31st May 2014, profit from operation was 3,752,000. The tax charge for the year was 25% of the profit before taxation. Required prepare income statement for the year ended 31st May 2014. Additional information: on 1st September 2013, a final dividend relating to the previous years of $0.04 per ordinary share was paid. On 1st October 2013, 5 million ordinary shares were issued at a premium of 0.10 each. On 1st November 2013, a right issue was made of one ordinary shares for every 5 ordinary shares owned at $1 each. Adjustment number 4. On 1st February 2014, land was revalued at $7,500,000. On 1st February 2014, an interim dividend of $0.03 per ordinary share was paid. Number 6. On 1st February 2014, an interim dividend of $0.03 per ordinary share was paid. Number 6. On 1st March 2014, a transfer of $500,000 was made from retained earnings to a newly formed general reserve. On 1st April 2014, the directors proposed a final dividend. So this is the format of the statement of changes in equity. So we have balance, share capital, share premium, revaluation reserve, general reserve, retained profits, and total. So we have to do this question. It will start. First we have to copy what we have in the question. Ordinary share capital 25,000, we have to copy in the column ordinary share capital. Share premium 5,000, we have to copy 5,000 in the column share premium. Revaluation reserve 1 million, we have to copy here. General reserve, there is no balance for general reserve. Retained earnings 2,950,000, and then we have the adjustments that we have to take into account. So we are going to work out these. So we are going to see the first part of this question. Prepare income statement for the year ended 31st May 2014. So we need to calculate. On 1st July 2013, 1,800,000 8% debentures were issued. For the year ended 31st May 2014, profit from operation was 3,752,000. So profit from operation 3,752,000. Then we have to less debenture interest. So debentures on 1st July 2013, this the end 31st May 2014, this will be 11 months. So we have to calculate 8% of 1,800,000 times 11 over 12. So this is the interest that we have to calculate. Interest we have 132,000. Then we have to less interest. With less interest, we'll get profit before interest. We'll get 3,620,000. Then we have to less tax. Tax is 25% of 3,620,000. The tax will be 905,000. This is the tax. We have to deduct the tax. Then we will get profit. The profit will be 2,715,000. So the profit after tax. So this is the first part. We have already done it. The first part. Okay. Profit from operation. We have profit 3,752,000. Less debenture interest 132,000. How to calculate the debentures? 8% of 1,800,000 times 11 over 12, 11 months interest. This will give us 3,620,000. Less tax, less tax 25% of 3,620,000. This will give 905 000, then profit after tax will be 27,1500, 2,715,000. So this is the first part we have already calculated. Now we are going to see the second part. What we have to do, we have to prepare the statement of changes in equity. This format has already been given. First of all, we have to copy what we have: ordinary share capital 25,000, and then we have 5,000 share premium, means 5 million, 1 million revaluation reserve, and then we have no balance for general reserve. This one we have 2,950,000, and then we'll get a total of 33,950. So, and then we have to see the first. On 1st September 2013, a final dividend relating to the previous years of 0.04 per ordinary share was paid. So we have to calculate this final dividend for the previous year, which has not yet been paid. We have to include it. First, we have to put profit. We have already calculated the profit, 2,715,000. Okay, 2,715,000. We have already calculated earlier. And then dividend, previous year's dividend will give us how much dividend? Dividend 1,000. So dividend we have to calculate it. Adjustment number 1, dividend 0.04 dollar times 25 million. This is the ordinary share capital, 25 million. This will give us 1 million. So we have to include it, 1 million in the column retained profit. So 1 million will reduce the balance, the total balance. And then we have adjustment number 2. On 1st October 2013, 5 million ordinary shares of 1 each were issued at a premium of 0.10 per share. We have to calculate this one. Issue of ordinary shares. Credit ordinary share capital, credit share premium, debit bank. So we have to calculate it. 5 million times 5 million times 1, 5 million times $1, and share premium 5 million times 0.10, and here 5 million times 1.10. So the first one we will get 5 millions. New issue. We have 5 million, and there is premium 500. 500 the premium. Then the balance will be, we have in the balance 5,500,000. So this one, and then we will have adjustment number 1, number 2, number 3. On 1st November 2013, a right issue was made of 1 ordinary share for 5 shares held owned at $1 per share. Right issue at par. So right issue at par, we have to do right issue. We have to calculate it. Right issue at par. Credit ordinary share capital, debit bank. Right issue was made for 1 over 5 times this one, total 33 million, 30, and this one also times 30. Okay, 30, you know how to get it. This one 25,000 plus 5,000 that we already have, we'll get 30,000. This is the column for ordinary share capital. So we have to calculate it. This will give us 6,000. So new issue, again, right issue, new issue, 6,000. there is no balance, so in the total we have 6 million. And then adjustment number 4. On 1st February 2014, land was revalued at 7,500,000 land. So what land, the value of land given 6 million, and revaluation land revalued at, so there is a revaluation surplus of 1 million, revaluation surplus of 1,500,000. So revaluation surplus will have 1,500,000. So now we have this one. On 1st February 2014, an interim dividend of 0.03 per ordinary share was paid. Interim dividend will reduce retained profit. Interim dividend profit. So we have interim dividend, this one, interim dividend, we have to calculate it. Interim dividend 0.03 times share capital. What we have, the share capital, 0.03. Interim dividend 0.03 times, we have 25 plus 5,000 plus 6,000, 36,000. So we have to calculate interim dividend on 36,000. This will give us 10, just cut over. So we have to use it, interim dividend, in the column retained profit. And this will give us this cut over. And then we have to, on 1st March 2014, a transfer to general reserve. Transfer to general reserve. There is no space to write it down. Transfer to general reserve. So we will have transfer to general reserve. Transfer to general reserve will have 5 millions. Transfer to general reserve, 5 millions in the column of general reserve. So in total we'll have transfer to general reserve. So we have to deduct from retained profit, and then we put it in general reserve. So here we are. And the last one, proposed dividend, will not be recorded in the statement of changes in equity. So this will give us a balance, a total of a balance, closing balance. The first total will have 36,000, and then we have 5,500, and then we'll have 2,500, and then we'll have 500, and then we'll have 3085, and then we have a total of 47,545. So here we are. This one, we don't need this line. We can complete it here. So this is the total for statement of changes in equity. This is called shareholders fund. Shareholders fund. So when we add all these, and then we add horizontally and vertically, should be equal to 47,585. So this is how to prepare a statement of changes in equity. So the question will be given to you. Even the format in the exam at times will be given to you. You just have to complete it. So you have balance. You have to copy what have already been given. 25,000, 5,000, 1,000, 20, 50, and the total. Profit, we have to calculate it. We have to less the interest and tax. And then dividend, the first one, dividend for the previous year, we have to pay 1 million. And then new issue, we have to make the double entry, issue of shares at premium, credit share capital, credit share premium, debit bank, and new issue, right issue of shares to existing shareholders for cash consideration. This right issue at par, credit share capital, debit bank, 6,000. We have to calculate on 25 plus 5,000 on 30,000. Revaluation surplus, the difference between land 6 million and land revalued at 7,500,000, the difference, revaluation surplus. So you have to put it in revaluation reserve, and the total interim dividend, you have to calculate it. Every time we are calculating interim dividend or any dividend, so we have to compute the share capital, then we calculate the interim dividend. Transfer to general reserve 5 million. So this is the total. So here we are concerning the statement of changes in equity. Thank you very much for your attention.